So in this video today I'm going to show you all how to prepare FIFO according to this given questions. So first let's have a look on the format. So here we have the format of FIFO. So FIFO means first in first order: date, quantity, rate, amount, quantity, rates, amount, quantity, rates, amount. These all are categorized into the three different categories, that is receipt, purchase. Receipt can also said to be a purchase, and issued and balance. If we have purchased anything, any of the quantity, or if we have issued, then again in the same way we have to balance those all the transactions over here. So let's have a look on our question. On 1st January we have purchased, so we will enter the transactions for 1st January. 1st January we have purchased 300 units at the rate of 3 rupees we have purchased. So here 3, if we will multiply these two, 300 into 3, we will get 900. So we didn't issued anything. Again I have already said that whatever we have done, either we have purchased or issue, we have to balance. Now we will balance this 300 as it is at the rate of 3 rupees, 900 total. So for this, the transaction of 1st January it is closed. So we have to close this transaction. Again now coming to the next question, that is on 4th January. On 4th January we have again purchased 600 units. 600 units at the unit cost 4 rupees. So if we will multiply in these two, that we will get 2400. It means that 600 into 4 we will be having 2400. Issue, we have not issued anything. We have already, now in balancing figure we already have a stock of 300. So we will write first this. So now again we have purchased 600. So 600 will be written here. We have to balance this. So now the transactions of a 4th January is already balanced. We have to close this transaction. Now again coming to the question, on 6th January we have issued 500 unit, cost is not given. So we have to calculate this. We have to enter this transaction. On 6th January we have not purchased, we have issued, that is 500 units. 500. So here we are preparing FIFO. FIFO means first in first order. We have to give the preference for the first unit. First unit means that is 300. Out of 300 means 300 is less quantity, so 500 is more. So we will take 200 from 600. So this 600 we have borrowed from 600, 200. That cost will be taken. This borrowed amount cost will be taken because we are taking from 600, 200 unit. That 4 rupees will be taken as here. So if we will multiply this, we will be having 2000 in our hand. So now the thing is that balancing total is 300 plus 600, we have 900. Out of 900 we have issued how much? 500. So we will be remaining in our hand 400. Unit cost is 4, that is 4 for 4 ja 1600 in our hand. So now we have to close the transactions for this. Now coming to the 10th January. On 10th January we have purchased again 700 units at the unit cost 4 rupees. So on 10th January we have purchased 700 units at the unit cost 4 rupees. If we multiply 700 into 4, that we will be getting 2800. We don't issue, we haven't issued anything. We have 400 stock in our hand. That 400 we will first we will have to close this, and then again we have purchased 700 units. That 700 will be written as it is, and again at the rate of 4, that is 2800. Now again we have to close this. Now coming to the next date, on 15th January. On 15th January we have issued 800, unit cost is not given. Now on 15th January we have issued 800 units. So in purchase dash 800 units. As I already said, we are preparing FIFO. First we have to give the preference to the first, because it's FIFO stands for the first in first order. But here 800 is more than the 400. So 400 is there. So we have to take again borrow from 700 400. If we borrow this amount, if we are borrowing the quantity from the next element, that amount only will be taken as a unit rate for this issue. So here if we are borrowing 400 from 700, that rate will be taken. So this 4 rupees. Then if you will multiply into 800 into 4, that will be getting 3200. So now here we have to add this. If we will add 400 and 700, we have 1100 total balancing figure, because out of 1100 balancing figure we have issued 800. So remaining in our hand, we will be having only 300 in our hand. So unit cost rate is 4, that will be 900. That is our, now we have only 300 at the rate of 4, 900 balancing figure in our company. Now again coming to the question, on 20 January we have purchased 300 units at the unit cost 5 rupees. That on 20 of January we have purchased 300 units at the unit cost 5 rupees. That is, if you will multiply, then we will getting 1500 in our hand, dash dash dash. Then we have the balance already, that is 300 at the rate of 4, that is 900. So again we have purchased, that is 300 at the 20 January at the rate of a 5, that is 1500. So we have to close this account. Now again on 23rd January we have issued, in 23rd January we have issued 100 units. So for purchase dash dash, we have issued 100 unit cost is not given. So now here on balancing figure we already have the stock of 300 and 300. So we are preparing the FIFO means first in first order. We have to give the preference for the first, that is out of 300 we have issued 100. Then the unit cost for these 300 is 4, that 4 will be taken here. So that is 400. If you will multiply into 100 into 4, that is 400. So out of 300 we have issued 100, so remaining is 200 in our hand. That 4 rupees here, that is 400, 800, and now we, out of 300 we have issued 100 unit, that is remaining in our hand 200. And again next one is already same as it is 300, that is 5, that is 1500. So here we have the transactions is closed for this. So now we have the closing stock. If we will plus these quantities, that is 500, 200 plus 300 is equals to 500, and if we add this 800 into 800 and 1500, then we will be having 2300. So now we can balance it, the figure. Here we can see in the question, in FIFO method, according to the FIFO method, that is we have 2300 balance amount of there. Here we already get the, we have got the exact figure of this. And coming to the units unit, we have 500. So here also unit is balanced. Friends, again I am explaining how we have calculated the issue rate, because in the question issue rate is not given over here. So here if we are issuing 500, we are, according to this FIFO, we have first in first order. We have first in first order. We have to give the preference for the first element only. If first element order is less than the quantity issued, then we have to borrow from the next element. That next element amount will be treated as the issue quantity rate. Thank you so much for watching this video. Thank you so much.